What's up, family? Happy Financial Freedom Fastlane Friday. That's a tongue twister, isn't it? So I wanted to do something special and give you guys a glimpse at a behind-the-scenes conversation at a conference I had just last week with some of my other advisor friends for this week's Financial Freedom Fastlane. So check it out. Let me know what you think. If you're into alternative investing, here are the thoughts of 3 top industry experts on our perspective on alternative investing.
So we were talking about looking at different investment vehicles for clients, specifically around alternative investments, whether it's private equity, private credit, real estate, and knowing when it's the right time to approach a client with that, understanding that people have different risk tolerances, but also being cognizant of the fact for a lot of our client demographic, we're the first financial advisor that they're working with. So I feel like there's an education component where you have to get them comfortable with investing in public equities, make sure that they fully understand the market before you start to engage them in private equity, private credit, or other opportunities, because number one, there's not a lot of liquidity, but also on top of that, like they need to be comfortable with like what the experience is with investing. So we were talking about with nonprofits and institutions, I personally feel more comfortable because I think they are more mission aligned and they're more comfortable with potentially the high volatility or high risk with a lot of alternatives. Or individuals and families, I think it just takes a little bit of a second and a little bit more education before you can put them in there. But I would welcome your perspective on if you've seen success with people engaging in some of these private opportunities and these private deals to build wealth.
I think directionally and conceptually, I agree with what you're saying, right? I think like public markets are the lowest barrier to entry, the most time tested, the most liquidity, most accessible, right? Way to invest. But if we look at just like investing in general, right? Like, why do we advocate for entrepreneurship, right? Because you're the closest to the business, right? When you invest in, what I mean by closest, I mean when you invest in public markets, like you're basically the last person to like get in on the opportunity, right? Like that is the liquidity event for the people who got in on the private level. You know what I'm saying? So when my mind, I look at it from 2 lenses. I do think there is a vantage point of comfortability that people need to have and fundamentals that need to check, boxes they need to check for sure. That's just across the board with investing. But I do think that private markets give people an option to play catch up a little bit from what I've seen from the cash flow that those investments can produce. Because the thing is, most of our people are going to be far behind the 8 ball from the accumulation method, right? Like, oh, you're 4%, you got to have $2 million invested to hit your target. Like, they're just either not going to get there or they're going to be far away. What I found is that when we approach it from a cash flow standpoint, it closes the gap because at the end of the day, the 4% rule is just based upon the fact that it's a time-tested strategy that you won't run out of money. But what you're really chasing is the cash flow number that portfolio can produce. So we're focusing on cash flow and we look at things like private credit or private equity. You're going to get to that target faster than you would simply investing in public markets, from my perspective.
And I think that, well, Anna, I would welcome your insight as well.
Yeah, I mean, I think there's a couple different things at play. One, there's the risk tolerance, there's the education piece, there's a risk capacity piece, right? And so you have to be very mindful of who you're approaching with this. My personal feeling is the way we approach it is, we'll have more clients who have more wealth and who are more sophisticated investors, more experienced investors who have more capacity for risk to invest in these vehicles. But I do think there is a curve where like you can start to introduce these opportunities to folks when they have like those good financial habits, when they've built up a certain level of portfolio, or where they have a certain level of excess capital to allocate there. And my personal feeling is like when we think about putting money into a vehicle like this with a client, we're thinking about it from what is the amount that you're going to contribute to your investment portfolio anyway this year? And so let's allocate a portion of that there, right? So whether that be, a third of what you're going to put away anyway this year, that's what we're going to add to these alts, and then the rest will go there. Like there's a balance. We're not trying to put people 100% into alternative investment vehicles with a 10-year lockup.
Right.
There's no cash flow, and they're not going to see a dollar of that until the end of the fund term. Like we're not going to do that. But I think there's a balance to strike between those. Once again, to play catch up, right? So that you can have a portion of your portfolio that is providing some risk protection, but it's also providing some juice from a return perspective as well that you're not going to get with public equities.
Right.
But I don't think it's for everybody. To your point, Chelsea,
Right.
I don't think most people need to be involved in that. This is like, one of those things where, and I was saying this before you came, George, that I view, there's a two-pronged approach for the accredited investor, right? Like there's $200,000 or $300,000 of annual income,
right?
And then there's the $1 million of assets. I personally lean on the folks with $1 million of assets minimum,
Right.
when I think about the qualifications. And if I'm considering somebody who's less than that, it's mostly because they've demonstrated a level of commitment and understanding and, willingness to learn and ask the right questions when they're evaluating investments.
Yeah, and I agree with that. And I think also too, like, there's levels to alts, right? So to your point about like I don't like venture is probably off the table for a lot of people, right? Because it's just like 1 in 10 are gonna make it, right? So then if you aren't even maxing out your Roth IRA or your IRA, like I don't think you need to be thinking about VC, right? So there's levels to alts too, in the goals and the intentions behind it. But that's kind of my thought process.
So I would also add, we have to acknowledge, right, like a lot of Black-owned businesses don't get access to capital. So even though we mentioned like a lot of businesses don't succeed, sometimes it's not because like their idea wasn't good or a lack of effort, but they didn't necessarily have access to capital. So at what stage do you even consider, investing? Like, are you looking at like angel, pre-seed, seed, series A, when you're thinking about some private equity opportunities for clients in Black-owned businesses? Like, how early are you considering?
That's a great question, because originally I was going to answer from the lens of like, when do I personally think about it? But from a client standpoint, as their fiduciary, I don't look at it whether it's a Black-owned business, or I look at like, is it a good business? You know what I'm saying? Like, and is it a good opportunity for the client, regardless of what stage it's in? But I would say now, I like in the beginning, I was not leaning as much towards. No. Oh, it's one of y'all's? Oh, okay. Cool. Okay. In the beginning, like I was like all for it. I was excited when I didn't understand the venture world as much. But now, I would say specific. Like I'm probably definitely closer towards like at least Series A, right? Like, because like it's just like when it comes to venture, because it's just like it's so all over the place, and there's so many that don't make it. But what I have been personally focused on is not venture, and it's been more private equity opportunities where the business is already cash flowing, they're already doing well, and they just need that juice, they need that capital to grow. But it's a track record that if they had this money, what they would do with it. That's what I've been focused on, and those opportunities. Sometimes those companies aren't even trying to get aren't even trying to go public or anything like that, right? They are trying to get acquired, but they just need that growth capital. And I think those opportunities have been very fruitful for my clients, with like a 4 to 5 year horizon of when they anticipate exiting.
Yeah, that makes a lot of sense. So you were saying cash flow positive. Heard something. I know something we look at is also the quality of the management team, and do we think that they're going to lead them to success? But is there anything else that you both consider as well?
So, of course, quality management team, like you said, cash flow positive. And then just like the end, like are they truly filling a market void, right? Like, if I don't want them to do something that's so revolutionary that it hasn't been done, like that's not personally like my cup of tea right now. But like, is it an antiquated industry that they are revolutionizing, or have they carved out their space? And like that's what I'm looking for. Because that's a proven market, right? Like look at the industry we're in, right? Like, it's like that's a proven market. It's like, how can I just take some of that market share?
Absolutely.
You know what I mean?
That's what I was gonna say. Like, I think folks get really caught up in the VC and angel investing world on like this revolutionary idea that is, way outside of this proven, sphere.
Right.
Where I personally am thinking, all right, how is this person thinking differently about something that is a very clear demand, a very clear need, like something we're always gonna have, or we're gonna have some version of it. And, either they are just operating with better margins, or they have, a more experienced management team, or they're consolidating the industry, like whatever.
Right.
That's much more appealing to me from an investment thesis standpoint, because I think too many people try to like be the super sexy thing, be the next Zuckerberg, and be like the next Tesla and way out here. Right. When the truth is, like, statistically speaking, that is such an outlier that you are very, very likely to fail trying to get to be there.
Speaking of just alternative and private equity, like, what are y'all's thoughts on all these businesses that like are basically slated to not be inherited or abandoned because the kids don't want the businesses, but they're really solid, boring businesses. Yeah,
I think that's the key. Like, but the problem is so many people don't want to do boring stuff. We were
Right.
talking about this yesterday, George.
Yeah.
Right? Like, people don't want to do the boring work that is so necessary. But the truth is, like, we all need a plumber, we all need an electrician, we all need somebody to mow our lawn, clean our house,
Right.
Paint the house, like whatever. Like, that's always going to be a need to some degree, right?
Right.
And so if somebody is willing to consolidate and be efficient and put good customer service and systems and processes in place, like, they're gonna corner that market.
Right.
I've recently had to have my furnace replaced in one of my rental properties. And like, getting in touch with some of these people just to get a quote was bananas. Because we ended up going with was I was able to call and set up an appointment, got an appointment the next morning.
Yeah.
When they were even sending me text status alerts of like when your technician is going to be there to check out what's going on. So I knew they gave me a window, sure, but like it was 10 to 12. They're messaging me all morning, like, all right, it's going to be around 10:30. Homie showed up at 10:35. Like, perfect, right? And that level of service, they had good follow-up after. They had an instant email quote with like the photos and all the diagnostics of what was wrong with it, right? That was extremely valuable to me. And that's what ultimately got my business, because I'm like, they're making the ease of business go well. And I know that there's a ton of market opportunity for people that are willing to do that. It's not sexy. Versus somebody's house is not sexy.
Yeah.
But like,
but people are always gonna need that.
Right.
But people are always gonna need that.
Yeah, if you put some new and once you like have awareness to it, like you'll see it. Like, for example, this is car wash I always go to. And I went one day and they like asked for my number and they sent me a text coupon and like it's just something felt different. I was like, are y'all under new ownership? I was like, yeah, we just gotta acquire by this new. I was like, so it's like it's this boring business. It's a car wash. My tailor who still writes down all of the names and has no CRM system, right? It never sends me a message like, hey, do you got some new suits? Like, it's those businesses where their kids probably don't care to inherit them, that you can go in, add strategic value, and then on top of that, like, it doesn't have to be the whole like shark dog eat dog world. Like, you can provide a win-win opportunity where you're using creative financing to acquire it, and then whatever their number is, like, hey, I want to sell it for this, you're paying them out of the profits of the business that you just acquired.
That seller financing is like one of the things that folks sleep on so much.
Yeah.
Right? Because people are out here trying to start from scratch. While you have this dry cleaner that's been here for 15 years, has a steady client base, you can come in and just do a better website, put in an SMS marketing system, put in a CRM, have a rewards program, like whatever, do business with ancillary products and or services, and build a really solid business. And you don't have to come out of pocket with a couple $100,000, right? You can just pay the seller as a portion of revenue on that business. And you don't have to be someone who's an expert in dry cleaning if you just have some sense on how to run a business.
Right. And you can put an operator in there. Exactly.
Somebody who's been a dry cleaner for 20 years.
Right.
Absolutely. And that's what actually one of our clients did, is they saw that opportunity with a local gymnastics studio, was run horribly. They were literally about to lose everything, lose the property. And then they came in and revamped it, and now they're doing $3 million in revenue. And it was so funny. And I asked him, and I was like, do you have any experience in gymnastics? He's like, I know nothing about gymnastics. He's like, our family knows nothing about it. I was like, so what inspired you to do this? And he's like, well, first and foremost, it's Black excellence. He's like, we're going to come in and we're going to do things well, and we're going to make sure the client experience is amazing. He's like, but also, he's like, I just saw an opportunity. There was no other gymnastics. There were no opportunities for kids in after school programs. And we knew that if we could get the right people in here and create the proper systems, they would excel. And now his goal is to sell it in the next 5 to 7 years and then use that income to potentially help another business or, ride into the sunset and chill. So I think, so it's really cool.
I think that's gonna be the cheat code for our people. Like, if they like, I'm not asking you to go out here and be no super entrepreneur and build a personal brand. I'm saying, can we find a way to acquire these boring businesses that are going to be abandoned the same way a house would be abandoned? Go in, add value, find a win-win with the seller, right? Because at the end of the day, that seller, they want to retire too. So it's just like, they're looking for they're not looking for a big lump sum. They're looking for a cash flow number. Say, over the next 2 years, I'm going to pay out X, Y, and Z. And you can live your life, right? And now you can acquire that boring business. And now you own a cash flow positive business that you don't run, that you put in strategic value. And now you're going to actually be able to successfully retire.